Invoices play a vital role in the export process, providing information to everyone involved in the export transaction, from the buyer and freight forwarder to customs and banks. But there's a catch. Invoices used for exporting often need more details than the ones you use for domestic sales. This can be confusing, especially for new exporters. We've seen many cases where shipments get stuck in customs or payments are delayed simply because the invoice was incomplete. So what's the difference? I'm Pari Crane, editor of Shipping Solutions International Trade Blog Passages. I'll explain, but first make sure you subscribe to this channel so you don't miss any of our Basics of Exporting videos, sharing practical advice for exporters and importers. Think of export invoice as an umbrella term. It covers specific forms like commercial and proforma invoices, which detail the buyer and seller, the goods being shipped, their value, and the sales terms. These are used by governments to calculate duties and taxes. Some of you might be looking at sample export invoices and wondering why they have extra information you're not used to seeing. That's because you're probably comparing them to your standard accounting invoices, the ones used for domestic sales. These invoices are primarily for getting paid and often lack the details needed for exporting. Here's what an export invoice typically includes that your accounting invoice might not. Either the Schedule B or HTS code for product classification, the last country in which the product was manufactured or significantly altered, not necessarily where the supplier or manufacturer is located or where you purchased the product. The Incoterm the buyer and seller have agreed to. These internationally recognized terms define responsibilities of the buyer and seller during the shipment. You can download a free Incoterms chart to understand them better. Look for a link below. The true value of the goods, even if they're free samples. Export invoices need this for customs purposes. A destination control statement, which is a legal statement required for items controlled under the EAR or ITAR, stating that the goods you are exporting are destined to the country indicated in all the shipping documents. This is not required on every export invoice, but it is allowed, and it is considered a good practice. You may also want to include export license information if appropriate, import country requirements if known, additional certifications and statements required by the buyer's country, U.S. government certifications. Finally, remember the original export invoice form must be signed in blue ink, and 3 copies of the invoice should be provided. Understanding the difference between accounting invoices and export invoices is crucial. Each serves a distinct purpose. Using the wrong one can lead to a lot of headaches. If you still have questions about export invoices, leave a comment below and we'd be happy to help. And if you need help creating your export invoices or any other documents required for exporting, thousands of successful exporters use Shipping Solutions export documentation and compliance software. We'd love to show you how it works. Look for a link below to schedule a free demo. If you liked this video, like it, share it, and subscribe to our channel. Watch for more videos sharing real practical advice about export documentation, compliance, and the latest changes affecting exporters. You'll also find hundreds of articles about every aspect of exporting on our blog, shippingsolutions.com/blog. You'll find a link below.